Friends, today we are going to talk about the book that professional traders call a Bible of Practical Trading. High Probability Trading, written by Marcel, a trader who, after losing millions of dollars and then earning millions, understood that survival in the market is the greatest skill. And today in this video, we will understand every point of his that turns a beginner into a pro and a struggling trader into a consistently profitable one. So sit back comfortably, because this is not just a summary but a lesson that will transform your trading from the inside. High probability trading, what does it really mean? Marcel says, the job of trading is not to take more trades, but to take high-quality trades. This is high probability trading. Its direct meaning is choosing setups that have a higher chance of winning, avoiding trades with high risk and low clarity, and even doing nothing in the market is an action. Many traders think that more trades equals more money. But says this is a completely wrong mindset. The real money is in those trades where the market is standing on your side, not where you are just hoping. A trader's biggest mistake, trading without preparation. Explains that most traders jump into the market without any plan. Saw a breakout somewhere. A big candle formed somewhere. RSI is oversold somewhere. A YouTuber said to buy. A friend gave a stock. And we take the trade. But the truth is, preparation is what creates profit. You must know these three things before every trade. 1. Why am I taking the trade? Exact setup, not emotions. 2. Where will I exit? Both stop loss and target. 3. How much loss can occur in this trade? Risk per trade must be fixed. If these three things are not decided, Marcel says you are not trading, you are gambling. Observe the market, don't jump in immediately. Marcel most powerful statement is that the market itself will tell you how to trade it. It is clearly written in the book. Every market has a different mood. Every instrument has different behavior. Every season has different volatility. The impact of news and events is different. Therefore, trading without observing is like driving a car with your eyes closed. Says that you should watch the market like a spectator. Where is a trend forming? Where is it breaking? Where is the momentum? Where is the price being rejected repeatedly? Where do the big players seem active? And when you get clarity, only then strike. Nothing is a more powerful skill than patience in the market. Risk-reward equation. The real foundation of high probability. A high probability setup is one where your reward greater than risk, and the setup is repeatable, and data proves that the winning probability is higher. Marcel has a simple line. You must bet small when you are uncertain, and bet normal only when probabilities favor you. That is, you don't have to jump with equal power into every trade. Risk is decided by three things. How clean is the setup? Is the trend clear or messy? Is the market stable or choppy? What is the size of the stop loss? Large SL equals more risk. And less consistency. What is the reward potential? Should be at least 2 to 1 or 3 to 1. Says, even a 40% win rate strategy can make you rich if the risk-reward is high. Trading's holy trinity, mindset, method, money management. In the book, Marcel emphasizes these three pillars the most. 1. Mindset. This is the biggest part, because the market tests you every day. Your impatience, your greed, your fear, your ego. Explains, good trading is boring. Your win lies in doing repeatable work, not thrilling or entertaining work. 2. Method. That is, your setup. That strategy of yours which can be repeated again and again. Trend following, pullback, breakout, counter trend, support resistance, volume spikes. Whatever your method is, it should be documented, tested, and rule-based. 3. Money management. This is the real engine of trading. Marcel says, even the worst trader can survive with great risk control, but even the best trader will fail without it. Fixed risk in every trade. Daily loss limit. Weekly loss limit. Fixed position size. No revenge trading. No over-leverage. These are the things that save the trader. What should you do before taking a trade? In the book, Marcel gives a long list of what a trader should check before every trade. We simplify its essence in this video. 100% confirmation of your strategy. 1 to 2 signals are not enough. A pure setup is needed. Market environment. Is it a trend? Is it a range? Is it sideways? Volume support. If there is no volume, the move does not last. Stop loss should be logical. Below the support, or above the resistance, not a random number. Emotion check. Are you stable or emotional when taking the trade? If you are not in a good mood, no trade. What is a high probability entry? Marcel says that a high probability entry has 3 qualities. The market is supporting, trend is on your side. Or a major level is providing support, risk is low, stop loss is small. But logical, the market has room to move, meaning there is space to go up to the TP. It is not a congested price zone. Why do beginners lose? According to Marcel Link in the book, the top mistakes of beginners are exiting early, letting the loss grow big, entry before the signal, fighting against the market, zero system for risk management, overtrading, trading out of boredom, trading out of excitement, revenge trading, looking for guaranteed returns. Link says, beginners lose because they want the market to behave like they expect. The market does not move according to your expectation. You have to follow the market. Friends, now we are entering that part of the book where Marcel Link reveals the real formula for practical trading: entry, exit, risk, psychology, and deep analysis of real setups. If you have understood the foundation behind, then the next part can change your entire trading life. Because now we are going to talk about checkmark entry at the right time, checkmark exit at the right level, checkmark keeping losses small, checkmark, and holding on to profits. These are the 4 things that all successful traders in the world follow. Trend, the heart of high probability trading. Marcel Link emphasizes that trading with the trend eliminates 90% of traders' problems. Trend is not an indicator, trend is the language of price. To understand the trend, Link gives 3 golden rules: higher high, higher low, indication of an uptrend. Trading here is safer. Lower high, lower low, indication of a downtrend. Buying here is the biggest mistake. Do not trade against the trend. It takes a lot of time for the trend to reverse, but it takes only seconds for your money to reverse. The market is never the same. Therefore, judging the trend is the first step of high probability trading. The golden framework for entry: 3 things must be clear. Marcel says that a perfect entry fulfills 3 things. Clarity, the price chart should look clean. Too many spikes, confusion, messy candles equals low probability zone. Confidence, you understand the setup, and you are getting proof. Example, breakout is happening plus volume is also increasing equals high probability. Breakout is happening, volume is dead equals risk of a fake move. Confluence, more than one thing agrees. Trend, price action, support resistance, volume, indicator confirm. The more confluence, the higher the win rate. The 4 most powerful entry methods, according to Marcel Link. In the book, Marcel Link talks about practical entries, not filling the chart with indicators. This is the method of professional traders. 1. Pullback entry, the father of high probability. A pullback is the trade where the trend is strong, price is retracing, then resumes in the same direction. Why is this powerful? Because the risk is small, the reward is large, and the setup is clear. 2. Breakout entry. A breakout should only be taken when the volume is strong. Marcel says, low volume breakouts fail more than succeed. The biggest rule in a breakout: the high of the breakout candle must be broken. Only then is there confirmation. 3. Rejection entry. Price stops at a zone repeatedly and then reverses. These signals are very powerful. Long wick candles, pin bar, engulfing pattern, hammer, all these indicate price rejection. 4. Support resistance bounce, the simplest and most reliable type of setup. Price touches a strong level and bounces back. This is considered the safest entry because the stop loss is very small and the reward is large. Stop loss, without it, trading is just gambling. Marcel Link clearly states, a trader without a stop loss is already a loser. Stop loss is not a random number. The SL must be logical. Below the support, above the resistance, outside the swing high/low, according to ATR. The real benefit of a stop loss is not that you avoid a loss, but that you decide in advance when to exit. Exit strategy, the real game plan for profit. Entry is easy. Holding a profit is difficult. Therefore, Marcel calls exit the most important part of the entire book. 3 ways to exit. Target-based exit, meaning the price hits a predetermined level, 2 to 1 RR, 3 to 1 RR. Support resistance, fib levels, swing highs, trail stop exit. The most money is made from this in a trend. Trail stop methods, EMA trails, ATR trails, price structure trails, higher lows break. Marcel says, let the market take you out, not your fear. Signal exit, when the reason for entry ends, then exit. Example, trend is broken. Volume is dead. Support is broken. Momentum is gone. Then get out. Loss control. the real-life jacket of trading. Marcel Link's biggest point: if you control your losses, profits will take care of themselves. Every successful trader understands this. Losses are unavoidable, but their size should be under your control. Rules: risk only 1 to 2% of the account in one trade. Daily loss limit of 3 to 4%. Half position size during a losing streak. Do not take a revenge trade after a winner. The strength of every professional trader is not in their profits, but in their ability to control losses. Trader psychology, the mental game that wins the market. In the book, Marcel Link calls psychology the most core thing in trading. Some big points. Checkmark: fear of losing. The fear of loss makes you exit early. Checkmark: fear of missing out. 80% of traders get caught in this FOMO. Checkmark: greed. Missing the exit when the profit is big. Finally, profit becomes zero. Checkmark: overconfidence. Taking big trades after 1 or 2 wins, followed by a big loss. Checkmark: lack of discipline. Making rules is easy, following them is difficult. Marcel says, don't fight the market. Read the market and go with it. Record keeping, the biggest secret of professional traders. Link says, if you can measure it, you can improve it. Therefore, every trade should be written down. Why did you enter? Where was the SL? What was the RR? What were the market conditions? What was the outcome? What was the feeling? The journal is the mirror that shows you the trader inside. The biggest rule of high-probability trading: patience. Marcel says, a good trader gets paid for waiting. Successful traders spend most of their time in the market doing nothing. And when they do it only in those places where the probability is highest. Friends, now we have entered the most important part of Marcel Link's legendary book, i.e., the part where a trader is handheld and taught how they can build their entire system from beginner to a professional level. Here, you don't just get rules, but the essence of decades of trading experience and thousands of hours of market observation. Let's begin. Winning versus losing traders. What is the real difference? Marcel Link explains that win rate, indicator, strategy, broker, none of these make you a consistent winner. The real difference between a winning trader and a losing trader is checkmark their mindset, checkmark their habits, checkmark their preparation, checkmark, and their discipline. Look at this difference. Losing traders trade without setup. Early entry. Early exit. Try to catch every move. Skip stop loss. Revenge trading. Chasing news. Large lots out of greed. Decisions based on emotions. Hiding losses. Inconsistencies. Overtrading. Winning traders set up with clarity, patience, planned entry. Logical SL. Measured size. Fixed risk per trade. Daily loss limit. Following the system. Emotional stability. Maintaining a journal. Slow but consistent growth. Marcel says, trading is not a money game. It is a survival game. Money comes to those who can survive long enough. The biggest weapon of high-probability trading: a trading plan. In the book, Marcel Link emphasizes that a trading plan is your protective shield. No plan equals gamble. Plan equals trade. A perfect trading plan is based on 5 pillars. Pillar 1. Market selection. What to trade. Not every market is for every trader. You should decide, what will be your market? Stock, futures, forex, commodity, crypto. What will be your trading style? Scalping, day flush swing. What will be your time frame? 5 meters, 15 meters, 1H, daily. Link advises, stay with few markets, but master them deeply. Pillar 2. Entry rules. Entry rules should be crystal clear. If words like maybe or I think come to mind, then that setup is not high probability. Entry rules should include trend direction, support/resistance, volume confirmation, candle behavior, indicator confirmation, optional, news conditions, time of day. Your entry is as strong as your pre-entry analysis is strong. Pillar 3. Exit rules. Exit rules equals the system that saves your life. Marcel describes 3 types of exit. Checkmark, protective stop loss. Trade went wrong, right arrow exit immediately. Checkmark, profit target. Reward received, right arrow exit. Checkmark, trailing exit. Trend is flowing, right arrow, let the profit increase. Exit rules must be written so that you trade with the system, not with emotions. Pillar 4. Position sizing. This is where traders make the most mistakes. Marcel Link says, your position size decides whether you will remain a trader or become history. Rules. Risk only 1 to 2% of the account in one trade. Not aggressive after winning. Not desperate after losing. Reduce position size during a losing streak. Position sizing must be purely scientific. Pillar 5. Post-trade review. Write down 5 things after every trade. 1. Why did I enter? 2. Was the stop-loss logical or not? 3. Did I exit on time or was I early/late? 4. What was the emotion? 5. What does the outcome teach? This habit makes you better every week and every month. High probability mindset, making your mind like a trader's. Marcel puts the most emphasis on trading psychology. He explains that to build a winning mindset, you must adopt 6 things. Checkmark 1. Patience. Patience is the biggest edge. The market does not give opportunities every day, but when it does, your rules decide with what accuracy you will jump in. Checkmark 2. Acceptance of loss. Loss is a part of trading. The one who is afraid of loss will remain stuck in loss. Checkmark 3. No ego. The market is always bigger. Every trader who fights it loses. Checkmark 4. Confidence in strategy. If there is no trust in the strategy, trading becomes only stress. Checkmark 5. Detachment. Traders need charts, not hopes, expectations, or prayers. Checkmark 6. Consistency. Not 50 trades in a day, but a few quality trades according to the rules are needed. High probability system, Marcel Link's real-world blueprint. Now we come to the most powerful part of the book, where Marcel provides a complete working system. Components of the system. Trend filter. Only trade in the trend. No counter trend. Clear setup. Breakout. Pullback. Support bounce. Whatever it is, repeat the same setup. Entry confirmation. Volume. Candle closing. Momentum. Price break. Risk control. SL fixed. Risk percent fixed. No impulsive exit. No widening of stop loss. Exit logic. 2-to-1 or 3-to-1 target. Or trailing. Or structure break. Trade filtering. Avoid low volatility. Avoid news timing. Avoid choppy market. Journaling. Writing every trade. Catching the pattern of every mistake. And changing it. Marcel Link says, systems don't make money. Discipline makes money. That is, the system is 30% and discipline is 70%. What do professional traders do differently? In the final part of the book, Marcel explains that the traders who survive for years have 4 common habits. They always take fewer trades, but high-probability trades. They keep losses small. They never let the loss increase. They do not cheat their system. They follow every rule. They keep learning. Every mistake is their teacher. The final essence of high-probability trading, according to Marcel Link. The market is unpredictable, but your behavior must be predictable. The strategy should be simple. The rules should be clear. Risk control should be tight. Emotions should be under control. And preparation should be perfect. Then you will not beat the market, but you will be able to flow with the market. And that trader wins in the long run. Friends, this entire journey of high-probability trading teaches us a very deep truth. Earning money in the market does not depend on luck or a magical strategy, but on the right thinking, right preparation, and right execution. If you start like Marcel Link from today, checkmark. Finding good trades, checkmark. Planning them accurately, checkmark. And then executing them with discipline. Then believe me, your trading graph will only go up, slowly but consistently. This is the real message of the book. Create high-probability setups, and only trade those that give a real chance of winning. If you liked this video, then be sure to like it, because your one like gives us the strength to bring such deep and knowledgeable videos. Share the video with your friends who are tired of making mistakes again and again in trading, because perhaps this video might change their life. And yes, if you have come to the channel for the first time, then subscribe and press the bell icon so that the notification of the next video reaches you directly. In the next video, we will bring the powerful essence of another powerful book related to trading, which will take your trading mindset to another level. Until then, keep learning, keep growing, and keep trading smartly. Take care. See you in the next video.